Hey guys, Darren here. Thanks for joining. We've got a great video for you here today. We've got some big earnings coming out this week. We've got Amazon, Apple, AMD, Sofi, and PayPal. And today I'm going to do a real quick video. I am going to cover PayPal. Uh, I'm not a financial planner, so please do your own research. I'm letting you know what I'm doing. I'm not recommending trades. And please hit that like button. Let's get the video out to as many people as possible. And if you're not subscribed, make sure you subscribe as well. With that, getting into, I'm going to touch on SoFi really quick. If you followed me, uh, I love SoFi going forward. They're going to be a huge bank in the future. They're a smaller fintech type online banking company that is doing extremely well. Any dip on earnings, I'm going to add to my positions. Right now, I've got long stock as well as deep in the money calls or leaps options. So with that said, let's go ahead and get into PayPal. All right, guys. So PayPal releases earnings for Q2 this Wednesday, August 2nd, after the bell. And PayPal was one of the first digital payment companies and really built the business on the online payments. So today, more than 430 million people worldwide use PayPal, and they've got 1.2 trillion in annual payment volume and 28 billion in revenue from fees from their charges. So they are a huge fintech online payment company. And here's the chart. If you look, it is still at lows, but it's kind of consolidated down here recently. And I think they're poised now for a big move up. You can see here back in 2021 during the COVID pandemic, people were ordering more things online. So they really spiked up in their volume and revenue and did really well. It's been tough coming out of COVID to keep up that stream of revenue. But there's competitive payments in the industry. Companies like Apple, Block, and Alphabet are all battling for the online payment business. And going forward, though, I think there's really a pendulum where it's swung too far down. And right now, uh, PayPal's stock is relative to where it was 5 years ago. However, it's doubled revenue now since that time, and free cash flow is grown nearly 50%. So they're doing very well. Uh, I think in this second quarter report, I think they're going to come out and basically say that they've monetized Venmo, which PayPal owns, and buy now, pay later. They should have helped the second quarter earnings revenue growth. So the future looks bright. Um, they are expected to grow earnings per share by almost 18% annually over the next 3 to 5 years, according to most analysts and their expectations. Let's look at now. Here are the last on market beat. You can see the last 4 quarters here. They beat every time um, on earnings per share. So bottom line. On the top line revenue, they beat here 6.81 versus 6.76. They beat in November of 2022, 6.85 over 6.82. They did slightly miss by 1/100th of a $1 billion. What is that? But they were expected to do 7.39 billion. They did 7.38, but they beat on top line revenue last quarter as well with 7.04 billion. So I think they're poised to do well right now going forward. The stock's trading at 73.98. You can see the 1 year chart. I think it's going to trend up from here. The 52-week range is from 58 to 103, so um, pretty much right in the middle. Good time to get in. The PE ratio 31, but let's take a look at on Yahoo Finance here the statistics. The forward PE is 14.93, so it's like 15 versus the current 31. So that tells you that right now, based on future earnings growth, it is inexpensive. All right, guys. So here's what I'm doing in PayPal this week. Uh, I'm using the Tasty Trade platform. You can punch in PYPL for PayPal in the upper left. Whatever platform you're using is fine. You can do this trade as well. We go to the trade tab and we can see the different option chains, and I've got the weeklies up. So if you look over at the right, you can see the August 4th, right after earnings. Next earnings is Wednesday, August 4th is Friday, the close. So we've got the highest IVR, which means we're going to collect the most premium for the amount of time during that cycle. Then it drops to 59, and then the next regular option cycle is 52 versus 76. So we're probably going to be trading in this August 4th. That's normally the best based on that IVR. I'm going to look at the 72 strike and click on the bid to sell that. And you can see we collect, the mid price is 204. So there's 100 shares per option contract. So that's $204 that we collect. We need to have $1,282 in our account in order to place this trade. So that is for small accounts, you may want to do a spread. I'll cover that in a minute. But if we look at the curve mode here, you can see as the break even is way down here at 70. So we're at almost 74, 73.98 right now. So it can even drop and we still are profitable and make money, which is nice. I love this curve mode that they show on Tasty Trade. So let's go back to the table mode. And if we take this and we hit the plus, we can move out. If you look here on the left, every time we hit that plus, we move out to the next option cycle. So now we're 12 days out, and now we're in the regular August 18th. We only collect a little bit more, $245 versus what it was at $205 for next Friday. So for 2 weeks more, we don't collect a lot more. That's why we're going to stick in the August 4th cycle. And let me clear that out and put it on again. But so we're at 204. Now, if we don't want to use this much buying power, what we can do is sell a spread. So I'm going to look to do a $3 wide. So I'm going to buy the 69 put. So that protects us on the way down. It's $1.01. So we still collect $1.05. So $105 on a $3 wide spread, which is 1/3 the width of the strikes, which is kind of what we shoot for. It's a good trade. The max loss is the $3 width of the spread minus the 105 collected. So it's $195 you can see right here. And our max profit is the amount we collect upon placing the trade. If we switch to the curve mode now, we can see where it's capped or at the 105 that we collected. And our break even is a little bit higher. It's at 71. So, but we're only using 195 buying power. And this works in IRAs as well. But it's great for small accounts and IRAs. So with that said, those are the trades. That's the trade that I would put on going forward. If you actually move out 2 weeks to the regular option chain, you only collect a dollar more, 106. So it doesn't make sense to really trade in that range for me. But let's see. I think that is it. That's the trade I'm putting on this week. If it goes my way and the news is good, they beat earnings and revenue, and the guidance is good, and the stock goes up, then I'll take a quick profit after earnings. I may wait until the end of expiration, depending on how much of the premium comes off. There's normally an IVR crush after earnings. If it goes against me, I will roll out to the next option cycle. So I never recommend trading more than 5% in any one underlying. So you don't want to get too big in any one trade. You want to have many different underlines on and stay diversified. But I think this is a great one for next week. And I think that's it. I'll see you in the next video. Please hit like and subscribe. Share the video with a friend. Let me know what you're doing in PayPal, and we will see you in the next one. Thanks.